Now the doomsday crowd, right, is fixated on the Mag 7, and they talk about things like the use of debt, like, oh my goodness, right, declining free cash flow. My next guest, I got to tell you, she was among the very first, I'm talking years ago, that said you had to load up on this group, even before we called them the Mag 7. Let's bring in Spear Invest founder, Chief Investment Officer, Ivana Delevska. All right, so here's the thing. I know you've kind of moved away from Mag 7, but the theory is, for the bears out there, is that if they fall, the whole story falls apart. And this is one of the things they talk about. They always have this really, the CapEx spending is just so amazing, and so there's not going to be a return on investment, right? And so now you've got negative free cash flow, and that's going to hurt them and eventually hurt the entire AI trade. You buying that?
Charles, thanks for having me. I think it's going to hurt for sure them, but it's not going to hurt the entire AI trade. And the reason is because they're going to continue to invest this free cash flow into capacity, because that's where the bottleneck is. So they're essentially selling capacity, and they really have no option but to invest.
So you don't think that there will be a return on investment, though?
Absolutely.
We're starting to see that now with
We are starting to see that with Anthropic, for example. Right. They've been able to generate over 40 billion in revenues over a span of like a few months, right? So if that's not return, I don't know what it is, right? And
so I want to ask you about this, two things. Memory. It's so funny. I've always been against the efficient market hypothesis, because if the market was efficient, this wouldn't have been the case. Like every quarter, we heard less and less about memory. All of a sudden, 553 times companies mentioned memory pricing. Memory has gone through the roof. Like no one could see that happening. Of course, the consequence of that has been DRAM. The prices have gone parabolic, but you're getting a little jittery on this space.
Well, Charles, what's going on in memory is that it used to be that high bandwidth memory was the AI memory, and now all of memory is becoming AI memory. And this is driven by the AI agents, right? So for an AI agent to function, they not only need an LLM, which uses high bandwidth memory, but they also use DRAM and NAND, right? And this is why you're seeing these prices go through the roof.
Right.
This is a cyclical sector, so that's one thing that I would highlight for investors. So as soon as you see these prices taper off, I think the stocks are going to taper off. So I think we're looking for better opportunities where they don't have the same pricing dynamic.
And if the market is all knowing, maybe the stocks pull back before we even get evidence of the tapering or a peak of DRAM pricing.
Absolutely. So even if you have demand 5x from here, if prices stop going up, right, I think it's going to be difficult for the stocks to go up.
Talking about some other bottlenecks. We've been talking about these a lot. Optic, we talk about a lot. All of a sudden, CPUs, I guess, inference and those agents you talk about have brought those back into play in the power box. Or and we're going to go over these one by one, how to make some money on them. First, on the optic side, Nokia. Full disclosure, I put my subscribers in this stock as well. What do you see? Because this is a name that brings back fond and memories, also pretty worrisome memories, because I don't know if people know, at one point this is the most valuable stock in Europe during the heyday of the tech bubble, and then it crashed and we never heard from them again.
Well, what's going on with Nokia right now, Charles, is that they acquired a company called Infinera, and they're a leader in optics, and specifically in the part of optics that is required for this AI system. So optics has two ways to benefit from this. First is from the broad build-out, but then as companies like NVIDIA start including optics in their scale up, right, that's going to be another level of benefit.
This made a real nice stealth move. No one was watching. Now we're watching. Where do you think it can go from here?
So I think it can double, and this is just based on their valuation.
So $28
multiple.
From where it is now, at least. It's $14 a share.
Yeah, absolutely.
All right. That's why I love you.
You're not the same multiple as the other optic stocks, so I'm not making this up.
All right, CPUs, you like ARM. ARM is intriguing. They were taken over, and then they recently came back public. It's extraordinarily volatile. What's the issue? It feels like it's inconsistent. There's something wrong with the stock in my mind. I love it, but then every now and then I wake up and it's getting hammered. I don't know what's going on.
So ARM, Charles, historically has played in consumer and data center. So the data center side has been doing okay. The consumer is a little more volatile. What's happening right now is as we get into this agentic phase, you're going to need a lot more CPUs per GPU than you needed in the past. So in the previous Blackwell system, you would use one CPU to power 16, 20 right. GPUs. Right. Now, for agents, you need basically 1-for-1, which is what's making demand explode.
And again, this is the stock got hammered, it came on, and again, it looks like it's building a base for one of its traditional big-time moves. KLAC, again, this name goes back a long way, sort of a sleepy semiconductor play. All of a sudden, it's a big deal. Why do you like it here? I mean, obviously it's done extraordinarily well.
So it has done well, but not as well as the memory and the semi stocks, right? And I think the reason why we like it here is that as we enter the next stage of growth, you're going to need to add a lot more capacity. Whether you're looking on the CPU side that we just talked about, whether you're looking at memory, I think capacity is going to be really the big bottleneck going into next year. So I think this is just starting to inflect from our point of view versus optics, memory. Those are already 1 to 2 years into the cycle.
And this is just now beginning.
That's right.
Wow. All right. Then that means it's got a huge amount of room on the upside. Before I let you go, the Cerebras IPO tomorrow, getting a lot of hype. Apparently, there was an effort for ARM to buy them. They were trying to buy them last minute. What do you make of it? 20 times oversubscribed.
Well, it makes a lot of sense with everything that's going on the hardware side. I think people underestimated what AI agents will mean for hardware demand, and that's just coming across in CPUs, in GPUs. Their products is slightly different than NVIDIA's.
Right.
They use much larger chips. That will be
huge.
That would be a better fit for model training rather than inference. So from that perspective, we probably prefer staying with the inference plays.
Okay.
But it looks pretty attractive as part of the broader hardware trade.
Great stuff. We'll find out tomorrow. Thank you so much. I'm glad we can get you from your latest ski trip, spending all that money. All right, folks, we're going to talk more about NVIDIA. They report their earnings next week. But I said coming into the week, it's a stock to watch. Rick Ross, he's going to stop by. Remember, anytime things get shaky, I call Ivana and Rich. Well, guess what? They're going to tell you, he's going to tell you what you should be buying right now.